Testing the audio real quick. Testing, testing. Testing. I think we're good to go. I saw some people commenting, and I got a few messages about that my mic was uh, too soft. So I am in the green right now, and I'm actually entering like the yellow side on the mic. So I think the audio is fine. Double testing. Yeah, I think we're good to go. I hope we're good to go. I cannot hear myself, so you know what? Let's just get straight into it because I think I'm hearable. You know. So what a day, and yeah, it has just been a day, guys. Like I am so excited to make this video. It's gonna be valuable, and let's just get straight into it. So on Bitcoin, what have we been saying? We have been saying that we have this potential reaccumulation vibe going on a higher time frame, but I clarified so many times that we can only talk about a reversal if we start breaking this market structure high. It's that simple. You have to break this high, or you have to break this high, which shows the horizontal line. You have to break this high if you want to see higher prices. It is that simple. It's the most fractal market structure pool that you can have. We had this high, and if you had broke that high, you could come towards the more internal high, which is the red drawing, and if you break that one, you can go to the all-time high. So we're going in steps, right? Um, so everyone was bullish. Everyone was bullish, and we were on the right side, so that feels extremely good. Because if we look what happened, is that we had ourselves a range here. So we had ourselves a range. I gave you guys two options. I even posted on my Twitter. First, this morning, I was looking at a potential. I was looking at a potential short from here if we broke structure, which we never did. So there was never an entry. Then I was looking for a short from this high, which ended up actually working, but I was not expecting this move, so I did not manage to catch a short from that high. And then once we pushed past that high, I gave two options. I was like, okay, you know what? This could be a Model 1 reaccumulation, and if that happens, we have a V-shaped recovery. What does price like to do if we break market structure after a V-shaped recovery? Very important. If we break market structure after a V-shaped recovery, having a third tap, Model 1 reaccumulation. If we break market structure, price likes to follow the internal trend. So I posted, if we break market structure, most likely price is going to continue itself in this created range demand right here. But that's only gonna happen if we break market structure. And guess what? There was no break. On the other hand, not only did we not have a break, we had a Model 1 distribution while SFPing your market structure high. And I can tell you from statistics that if we break this low, and we come up and we get a redistribution, there is literally 100% chance of price coming down. Okay? It's called a setup that me and my friend created, and it's called KCC. But just know, I'm not going to go into detail over this distribution. There's 100% chance of that trade working. Okay? At least to the low of the redistribution, minimum. Okay? So yeah, the beauty of it is that we had that buy to sell. You can kind of call it a failed auction, but you didn't really have good structure to wait for, because when I trade my Model 1s, I would like to have a break back inside the initial range. meaning that I would like for price to sweep the high and then get a market structure break back inside that range. A very sketchy 1 minute market structure break above the range high. So at that moment in time, you don't really know if you're going to get that buy to sell effect, right? Just a very risky entry in my opinion, and I did not enter there. And this barely missed this high. It's like on a few cents, and then this was all like internal structure, right? So we ended up getting that buy to sell effect, and then looking back at it, right, we can clearly tell that there's a Model 1 distribution going on. And just staying on the 30-minute time frame, we can see that we have a breakout structure right here. So, and I think I do have to say, switching to the 1 hour. Oh no, it was also a 1 hour break. So we broke internal market, creating a Model 1 distribution, which is technical. This is one of the setups that we have and that we trade on every time frame. So just staying on the 1 hour, we can see that we had our 1 hour order block with imbalance right here. Price came back into it. Put your stop above the high, and you target the low, and there's your 3% gain, right? Very easy trade. And it's so weird, traders that I look up to and that are really good, and they just kept trying to long. They took 2 losses back to back just trying to long it, and I'm like, why are we longing? We have not broken market structure. It's that simple. We have not broken market structure, so why are we trying to long? You know, this is looking more bearish than bullish to me at that moment in time. So to refine your entry on that short idea that I just gave, you can easily, let me see. Yeah, this technically speaking, this is not a 1 minute break. This is your 1 minute break, just because you don't have those 2 candles back to back. But this could have been your short. Did you take that high? This could have been your short right here on the back test of it after breaking the high. And you could have taken profits at the low. Because I like the front run, might take profits, and then you would have gotten filled here. And either way, you would have eventually gotten filled right there, right? So, yeah, very simple. I don't understand why people just kept on trying and long a Model 1 distribution. Okay. Point on the chart as well. Because if this Model 1 distribution is going to have the follow through. Because if you have a Model 1 distribution, you cannot say, oh, we SFP'd a market structure point and we broke structure here, so now we have to have a full-on rotation back towards the low that put in that high, meaning this low, which we have been also at lowest, zoom in on the lower time frames. That single break is invalidated if you have a Model 1. If you have a Model 1 and you SFP the high, you want the range low to break, meaning this low right here has to break. And we have not been breaking it yet. So you guys know by now that the technical target of the Wyckoff is the opposite range extreme point. So in this case, we have a distribution, so the technical target is the range low. And we just hit the range low, and we actually wicked the range low. So that is not very bearish, right? There is a place I'm looking at, because we can wick it temporarily and then continue lower eventually. And we have some resistance above us. We have this 15-minute order block with imbalance, and we have this 30-minute order block with imbalance right here. And this one is actually lined up with the downwards market structure pool. Meaning this pool from the top down, you have a high, low, lower high, lower low, lower high, lower low. So we have some resistance to beat. I would say if you break past this supply zone right here, you're going to have a full-on rotation back up and you're going to take the high. And in that case, I don't think we SFP the high. I think we go higher eventually. Okay? If price was intended to go down, the market maker had his chance to fill his positions here, here, and especially here at this buy to sell, That's insane manipulation that's going on. So, yeah, I don't want to see it break past this point. But low-key, I just wanted to not even go past this supply engine, just continue down. So we have some support below us right here, and I do think that's going to give a bounce. However, if we go there, I personally think that if we go there, we have broken that low. So I think if we go there, most likely we're going to put in a lower high for a lower low. However, there are some rules regarding ranges and range deviations and then extending your range. It could also be still in the area for it to be a valid range deviation. So preferably if we come down from here and we come back up, I want a reconfirmation, meaning the structure from this low to this high has to break back to bearish if I want to short. Okay? If that happens, yes, I'm definitely shorting. So it just feels be on the right side of the price action, Seeing people long left or right, no one really talking about how bearish this could get, because this could get really bearish. Like I'm pretty confident that if we lose this demand zone right here, yes, there are some areas that we could bounce from, especially this area right here. But I do think that if we come down here and we don't start breaking insane market structure back to bullish or anything, we could have that full-on rotation back down towards the low, grabbing all sell-side liquidity. That's just following basic market structure rules, right? And remember that if this short is a redistribution, guys, meaning it has its own little Wyckoff, that's going to work. I have not seen it fail. I have not seen it fail. At least to the initial range low of that redistribution. Okay? So we've talked about Bitcoin now, but this is all of the things I have taken into account while adding to my Matic short, which I've been posting about a lot on my Twitter. So, really refreshing you guys on this trade is that initially when we were ranging and all of this didn't happen yet, all of this price action, I told you guys that if we start breaking this volume area low, the range is imbalanced. The volume area low is at the EQ, and this is just a gap here. So I told you guys that if we lose that volume area low, most likely we're going to have a rotation back down towards that initial range low, right? And I was wrong about that, because what happened is that we actually lost it, we back tested it, we lost it again, and then boom, massive bullish buyback. And we broke structure, we got the retest, and we got the full on rotation back up. So that's actually it's a lovely value area deviation that looked extremely clean. And even though I thought if we lose this we were going to go to the range low, you wouldn't have lost any money on any trade, because you could have short scalped it here and you've already been de-risked the moment you wick this low and you break market structure back to bullish, and then right here you could have entered long. I told you guys about the Solana long that I missed out on. That was actually that long, the same timing of this Matic long. You could have catched the Solana long. However, why, just looking at a supply and demand perspective and like a market maker perspective, liquidity, all that stuff, why do you think this could happen? Trapping all those people that think we're going to go down here, trapping all those breakout shorters just for price to push up again. Why do you think that could potentially happen? Well, we still had some unfinished business above us. if price really wanted to come down here, apparently the market makers were not enough or were not in big enough of short positions for or to allow price to come all the way back down there, right? And that could be the case. These highs here, which is nice sell side or buy side liquidity, while also having range supply right above us. If I zoom in on a lower time frame, it looks way cleaner. But you guys should know that this wick with that up candle, if I zoom in, is going to be nice looking range supply. So we still had some nice range supply above us with buy side liquidity, these highs. What happened is we came up and we pumped pretty hard, which was very dramatic, pumping so hard while the rest of the market is kind of chilling. And I looked at the chart and I'm like, yo, we could have a Model 1 distribution grabbing that liquidity and that supply. That could be the reason why price is pumping hard right now, because we have to grab that liquidity, hit that supply, mitigate it, and then we push down. And I was like, okay, this could be a big Model 1 redistribution, a massive one. At the same time, we also have a reason to come lower if whales want to accumulate this asset, because we have a monthly order block with imbalance below this range low, you know? So I was like, if they want to accumulate, this could be a very ideal area to do so. But then they have to push price down here in order to fill their long positions. And that could be the reason of this accumulation. It could just be that could be the reason of this distribution. It could just be a distribution to later on fill their long positions, right? But just looking at a supply and demand and a liquidity perspective, the moment you mitigate that supply and you wick those highs, there is no more liquidity, locally speaking, there's no more liquidity above you. You grabbed all of it. There's no more liquidity and there's no more supply above you. And guess what? All the liquidity is below you now. And in demand. And that's really important to pay attention to, because we have to think logically. All of the liquidity, all of the buy side liquidity has been taken, all the supply has been tagged, and all the sell side liquidity, or the sell side liquidity, is all that's left. So I'm massive distribution. And I'm like, okay, what do I like to see in order to confirm an entry on a distribution? Well, we can have a market structure break from the low up, right? We can have a market structure break, that's one. We can have a break that's also back inside the value area. That's 2. We can have a good looking return to zone. That's 3, right? And we can have an imbalanced range. That's 4. And we could potentially have like a demand flip. So I have like 6 that I can look at to make a distribution trade to a high probability, a very, very, very high probability distribution trade. And I was looking at those variables and I'm like, it checks all of them. We have a Model 1 distribution, literally grabbing all buy side liquidity and hitting all remaining supply that's locally in this range left, okay? I zoom in. I have my breakdown here. So following market structure from the low up, we have high, low, higher, high, higher, low, higher, high. This is just one candle, so that's not a break. I have no more. Okay. We have the break right here. Boom. I can clearly see a demand to supply flip, because this was demand and this was supply. So I clearly see demand and supply taking over. So I have my local market structure break. That's one. I have my demand to supply flip. That's two. I have my potential break at that moment in time, but I was expecting it to happen inside the value area. I have an imbalanced range in general, and I have to return to zone. So I'm like, this is all that I can ask for. This is all that I can ask for. So how did I manage this trade? Because the stop loss is kind of big, right? And that's not what you want to use. Because at the same time, I was like, yeah, we have a flip here. So instead of just shorting the break right here and putting your stop above the third tap high, we could put our stop loss above the flip. Price normally doesn't go higher than the flip. But I really wanted to be sure that I didn't get stopped out for anything dumb. Um, so I was like, okay, I have the break here. This is the clearest invalidation on planet Earth. So I'm like, I'm gonna keep my stop there, and then once I see price, do more stuff, create more price action, and I see more short confirmations, I'll keep on adding and adding and adding and adding on the short. Okay. So initially, I saw that we mitigated the supply already right here before actually breaking market structure. And that's already where I entered. You can see that on my Twitter post that I did right here were the first shorts, and it was actually before we actually broke market structure. So that times where you already mitigate the flip and then you break structure, right? So I already started scaling in right here. I already started scaling in right there. Then what happened is we had our break. And then we actually broke internal market structure. So we went up, down, up, wicked the low, up, and then we broke it. Looks like a model 2. Let me grab it. Model 2 redistribution. So right here, I added more. So we have one entry. Then on the internal break, I have my second entry. And then we actually broke higher time frame market structure. It's a bit laggy, so bear with me. But this was our main low. Oh, we did not break that yet. This is our more important low. And this is our even more important low. Two very important lows. But I put that value area on my chart, and we broke back inside that value area high. And I actually put a line of where the value area high was supposed to be. Right there. Get rid of it right now. So I was like, okay, we're already back inside the value area now. And then what happened is that we went up, down, up, down, up, clearly showing redistribution signals right here. And then we broke it right here. So I added more here. And normally, if you look at it from a Model 1 from this perspective, this fractal break was already enough. But I was already short, right? So I just took the safer route. But yeah, added more there on the Model 1 distribution with the internal break. And then we started breaking 1 hour structure, the more important low that I was talking about. And we actually, we broke that one. Here. We did not break it yet at this point, but even if you wick a low and you come up and you break that internal structure from the low up, you're going to go back towards that low. So you're going to break the low eventually, right? It's all about timing of when the candle closes. So took the more important low right here. Price went up. I kept following it. And then right here, we broke it again. Hey, guess what? A 1, a 2, a 3. And we broke market structure again. So, did I enter once more? I thought I did. No, I didn't. No. So, I'm all talking like this whole trade market maker involvement, right? Having a massive Model 1 that could potentially be, let me see how big the move could be. A massive Model 1 that could be a 25% move on a top 15 asset. I think Matic has a $1 billion market cap, like billions, I think. Let me double check. Give me one sec. Matic 6.6 billion. So an asset with a $6.6 billion market cap potentially having a 25% dump. That's insane. That's insane, right? So that takes a lot of market maker involvement to short an asset that is this big. So I am anticipating on market maker involvement here because I see the Wyckoff Model 1 distribution grabbing that last liquidity, hitting that last supply. And then on the move down, guys, on the move down, what do we see? On the move down, we see Model 2 redistribution, Model 1 redistribution, Model 2 redistribution. Like, it's so obvious that there is a big player shorting here. And even here, on the 1 minute, it's not valid using the market structure rules, but you can clearly see that there is a 1, there's a 2, and there's a 3. You know, SFPing that last high before breaking structure eventually. So you see so much market maker involvement is actually insane. It's actually insane. But coming to a conclusion here, deleting these drawings a bit. Okay. Basically, I saw the distribution and it checked all my boxes, all the extra variables that could make the trade go to like a higher probability setup. They were all checked, right? And that's why I took the trade and I added in and I added in and I added in. Now I'm checking higher time frame market structure, right? So I'm like, okay, we have the Model 1. What's the highest time frame valid pool? And it's looking like it's the 6 hour. Yeah, it's the 6 hour. And we actually broke it right here. So we broke 6 hour market structure. So I'm really convinced that this could go down. But in order for this to go down, Bitcoin has to come down. Like this thing is not gonna dump 25% if Bitcoin is not going to, right? But I have also been telling you guys about sometimes you can actually reverse the correlation between Bitcoin and alts and Bitcoin. Because I really realize that sometimes at these higher cap coins like Solana, which is a top 5-6 coin, and then Matic, which is a top 20 coin, that if you're not sure if Bitcoin is going to go down, but one of those top 20 coins is clearly giving bearish signals, you can kind of anticipate that Bitcoin is also going to go down. Not many people use it that way, and I've not heard anyone say it, but I've just been noticing it that have such clear short signals higher market cap altcoin, you can kind of reverse the correlation that maybe Bitcoin is going to go down because Matic is showing very bearish signals and not the other way around, right? But it is lining up with a bearish Bitcoin scenario as well, But just looking at the 6 hour time frame alone, we clearly have this supply zone right here. We clearly have that supply zone, and we just broke market structure. It isn't the best break, I have to admit. It's not the best break. The break is kind of small, but it is a break. But price could easily just come up from here before rejecting down. That's very normal. We have a Model 1. This can just be the test or the LPSY, whatever you want to call it, right? Pulling also the value area to... Yeah, this looks extremely nice. Get confirmations. I'm gonna keep on shorting. I'm gonna keep on shorting. I am trying to open a sub account, which has not been working really good for me so far. Been trying all day with sub accounts on Mex, but I have a good entry on the initial account, like the main account that I use. So all the shorts in between, I just want to take them on a separate account. But yeah, this is looking extremely nice. This 6-hour order block with imbalance is lining up with that value area high, the POC. So price could come all the way back up right here, just have that retest, or just to continue down. Um, Zooming in, where would that be? Yeah, zooming in, you can kind of see the tiny mitigations. Mm, yeah, I would just keep it in a chart like this. Basically, you have to break like 10 to 15. Yeah, you have to break 10-minute market structure back to bullish in order to get towards the POI. So we see 10-minute market structure breaks, 5 to 10 minute, then we're um with a very high target, or a very low target in this scenario, because we're shorting. But I am glad that we broke that low, even though it's not the best break. A break is better than no break, right? But it could even come higher, but I don't want to. I don't want price to come higher, because looking at it on the 2 hour, we have a supply zone there. Um, yeah, looking at it on the 2 hour, we also have a supply zone there, but I think that one is pushing it. We could also come all the way up there, and then you would have another volume area high deviation. Um, it's still valid. The invalidation is just this high. My stop loss is above that high. However, why have such an aggressive sell, breaking market structure, just to come back outside the value area again before coming inside? It is possible, but normally when you have a Model 1 that breaks back inside the volume area, you don't really come back out again just to mitigate something. Preferably you want to mitigate something inside. That's why I prefer this 6-hour block. But yeah, I'm aiming here, guys. This is literally my target. I am not taking profit beforehand. Maybe I am taking profit if we come all the way back down and I see like insane accumulation vibes going on. But I'm aiming for this range low here. So if that happens, guys, I am done trading for the month. Like, that's going to be my biggest trade I have ever had, just because I went deep. I went heavy on this short. I went very heavy on this short, just because I got all my confirmations. It's as simple as that. Technically speaking, I could already kind of put my stop almost at break even, because my average entry is, let me see. My average entry is here, which is kind of at that retest zone that we were just looking at. So yeah, I'm risking a lot if we not even a lot. I'm risking, let me see. I'm risking 2. Yeah, I'm risking around 2.5% if I keep my stop above that high. But technically speaking, you don't want price to come all the way back up there. I'm putting it there. I'm just putting it there because it is the clearest invalidation, and on a trade like this, I'm willing to lose 2.5%. But the moment we start breaking more intense back inside, or we mitigate it and we come down, I'm putting my stop to break even, and I'm not risking anything anymore. But I really like having this hedge open, because I am gonna long and short scalp on the other account, right? Which is still in the making, but it's always nice to have like a hedge open, and then on the other account you scalp long, scalp short, while having that big ass position running, right? And you bet your ass that if we come down, I'm gonna scalp every move that I can scalp, right? It's just nice to have that big position backing you up every move, and potentially backing up every loss that you make in the meantime, right? But yeah, wrapping up the because I have gold trades to go over. Wrapping up the Matic short, we had the Model 1. It grabbed all liquidity. It mitigated the last supply. We broke structure. We had a flip. We had a return to zone. We had an imbalanced range. And that was all that I needed to go heavy. I went heavy. It has swing potential. But it's only going to go there if Bitcoin allows it to, right? If Bitcoin is not going to dump, I don't think this is going to dump this far, because we're talking an extra 19%. So yeah. Enough on Matic. Just know for now that this trade is running. My invalidation is above the high. If I see confirmations right here, meaning a 5 to 10 minute market structure change, I will add to the short again. Okay? Then on gold. This was not actually a trade that I took. It's a trade that I missed, unfortunately. But the only trade on gold was a short up there. But before I get into that short, I was really doubting if I was gonna use this as a Model 1. Just because I don't really like the deviation here. It looks more like a break than a deviation. But after seeing more price action, it could be a Model 1. It could be, you know? So I was more careful here, because instead of pulling this as my range, I was aware that it could be a bigger range in the making. To confirm and to determine which idea is better, I can also pull the value area, and in that case, you at that moment in time, you kind of had like two humps, meaning this is its own range and this is its own range, instead of this just being one range. Because if this is one proper range, you would like the value area to be like more distributed like this, and not as two humps. Okay. So I was kind of conflicting myself whether to see it as a big range or a or two separate ranges, and I ended up going with the two separate ranges to confirm, not to confirm like my trade, but like I had in the back of my mind, I had this as one range and then this as its own little range right here. Let me put it in the chart. Like this. Yeah, so looking at it from this perspective, you know, you could say we have like a Model 2 and then we hit the range high, and from there we can dump again. But that was also conflicting, because the way we came up here, you know, that slow grind up, having that internal structure, and then having that internal structure break, immediately followed by a buyback, that sell to buy effect, that's typical for a Model 1. The test of a Model 1 always has that. If we have a test, if it happens, it's very, very typical for one. We can actually, especially on gold, you can just go back in time and you can check out which one was it? Yeah, you can use this one. So you know how we had the initial range low and then we had that V-shaped recovery. Well, this was the test, or the LPS, whatever you want to call it, right? And it broke all that structure from the low up just to push higher again. That's typical for a Model 1. Very typical. So here you can see it just back in time. You had the Model 1 that did not hit its target yet, because the target was up here. And then before hitting the target, you had that internal break followed by a buyback. That messes up a lot of people, and it's typical for the test or LPS of a Model 1. And we had the same here, but that's indicating again that this could be a big Model 1. So I really had price action showing me like different confirmations, right? Whether to take this as a range or this as a range. I don't really like trading if I don't have I really don't know what to use. So I was just following my local plays, and we did end up creating a range after sweeping the potential range high. And We had here our initial range high. We swept it, and this was our third tap. And guess what the entry confirmation was, guys? We had our return to zone here. We had our market structure break right there. I grabbed the value area, and then we had the volume area high retest. So my exact short was on the first bearish candle close after retesting the volume area high. I put my stop loss above that high, and then I took it towards this low. The RR was not the best at all, but I knew that we were on we were at the, let me pull it. Okay. Just making sure everything was okay. I knew that we were at the bigger range high, right? Or a very important. So we could have a potential swing play, more of a swing play. So what I did is I was up 1.6%, around 1.6%. I cashed out 50%, which was equivalent of a 0.8% gain, and I put my stop to entry. So let's just use this. My entry is right here. Put my stop loss above the high, hit my first TP right there, which is the technical target of the Wyckoff. Then I moved my stop to entry because I was like, you know what? We have to break market structure to get back to my entry. I knew it could wick it, but I wasn't really expecting it. And yeah, we did end up wicking it. So I got stopped at entry on the remainder of the position on this wick up. Knowing that we could wick it, I didn't want to risk any more money trade, right? Because in the back of my mind, I was also thinking this could be a bigger Model 1 and I'm just shorting against a big Model 1, so I better be careful. So I had a 0.8% gain here. Again, Model 2 distribution with the third tap having an internal break back inside the value area. I shorted the retest because here the RR was really shit. Shorted the retest that we got right here, and then I targeted the low because I thought we had potential of it being a runner as well. What happened about the trade that I missed is that we have one supply zone remaining. In this whole move, in this whole range, only one supply zone was remaining, which was this tiny little 1 minute order block with not even some imbalance. I think this is like not even mitigated, but just this tiny 1 minute block. Right, it's like turn an accumulation, having our 1 tap, our 2 tap, and our 3 tap. But what happened is we came up very, very slow. And if price comes up this slow, that's not what you want to see for a Model 1. It needs to be way more aggressive. So we could say, from a market maker perspective, that we had the Model 2 distribution. It pushed price down, and it just has a slow grind up. It needs to mitigate one more thing before we can actually have the aggressive move down, right? And that thing could be this 1 minute supply zone because it was the only supply remaining in this range. So price came up, we tapped into it. The way we came up, we put your stop above the high, target that low for a quick. This was a quick 3% gain. Like, how many minutes is? In 5 minutes, you could have made 3%. So I missed this one because I was more focused on entering more and more on my Matic trade. But this was the only other valid trade that I see on gold today. So we had that Model 2 short, and then we could say that the order flow objective was to just hit a bit more supply before really pushing down, and we left a nice looking return to zone. So just following market structure, we broke down from the range here and just following it back up, this pull. We have our break here, and this could be the lower high for the lower low. And that internal break right here is the confirmation that we need for that lower high. And we wicked the ranging. Nothing really happened again. So I don't want to make it too long because that's gonna take forever to upload. I hope the sound quality is good, but yeah, be aware of what Bitcoin might do. Oh, looking at it now, we're in that first supply zone. We wicked the low, so cannot really confirm that we're gonna go down. Do we have some internal structure? No, not really. It looks like we have a tiny distribution here, but that's such a low time frame. I don't even want to look at that. So no, the technical target of the distribution has been hit. If I see Bitcoin breaking bullish and bullish, right, and I see Matic coming up with it, I'm gonna de-risk myself. But as long as Bitcoin doesn't break bullish, internally speaking, and Matic is also not turning into a massive fucking accumulation or anything, then I'm gonna keep on holding that short until the range low. And I hope you guys had a great trading day. It was a nice Monday for me personally. Many unrealized gains and a 0.8% realized one. If you have any questions, you can let me know. You can ask them in the comments or shoot me a message on Discord, and I will see you guys tomorrow.